Freelancers and consultants, your withholding tax requirements just got serious. It is a common misunderstanding that the 5% withholding tax, or WHT, is a new addition to the 2026 tax amendments. It has, in fact, been a requirement for several years on service payments exceeding Rs 100,000 per month. What has fundamentally changed in this bill is the precision of the law. Previously, many freelancers argued their specific services were not captured by the Act. The 2026 amendment to Section 85 systematically closes these gaps by listing specific categories: social media specialists, brand ambassadors, photographers, event organizers, and modelers, among many others, ending with a broad catch-all for any individual. Mechanically, if your client is a corporate entity, they are legally required to deduct 5% from your invoice and remit it to the IRD. For the payer, this creates a significant administrative overhead. They must file monthly WHT returns and issue you a tax certificate within 30 days. For you, the freelancer, you must track every certificate to claim a credit against your final tax bill. Tax credits reduce the tax you have to pay because it shows the IRD the tax already paid by your clients. If the client fails to deduct this tax, be aware that Section 124 makes the payer and payee jointly and severally liable. The IRD can recover the missed tax from either party. We must address the refund reality. If you earn below Rs 1.8 million tax-free threshold, you are technically entitled to a full refund of this 5%. However, in practice, the IRD refund process remains systemic and slow, often taking years to process. For lower-income freelancers, this WHT often becomes a permanent cash flow cost rather than a temporary advance. Proper documentation is your only defense. Follow us to make sure you never miss a tax update so you never lose any money.